Good day, everybody. It's Greg Schnell, and I am here with the market review for the Canadian Technician. Thanks for taking the time to join me. This week, I wanted to cover off the industrial stocks out there. We all know that Boeing is a big anchor in this, and this week we found out more about Boeing that they're not going to make the 2019 timeline. They're moving out to 2020. Will they start to reduce production? And one of the questions I have is on my recession indicator. It shows that industrial production is giving me one of the signals that we need to think about for recessions. So not too worried by that, but I want to focus on that. So today we're going to cover off as many industrial stocks as we can shoot through, and I'll go through those. So anyway, to find my blogs, they're on the Stock Charts website, and you can also go to gregschnell.com and catch my blogs over there. Contact information, new update at gregschnell.com, Twitter at SchnellInvestor, and website is gregschnell.com. Okay, so for our agenda today, I'm going to do an industrial stocks drill down, and essentially that's going to entail, first of all, the list will have 40 stocks. We'll go through it and just kind of analyze those 40 stocks just to see where they're at, and that should give us some more clues. And if you want my full commodities countdown type review with commodities, currencies, equities, and bonds, that's available as a subscription at gregschnell.com. Okay, jumping into the charts. So first of all, I just want to show you what we're working with here. We've got a chart list of stocks, and I've split this list up into two, and one of the benefits of that is we could use Julius de Kempenar's RRG charts. By the way, if you're not following Julius, he's got wonderful work out there with a different method of looking at it, so it's quite interesting, I think you'll find. Anyway, the second component of that is he'll also be speaking on January the 4th at the Market Vision 2020 presentation. I'll be there as well, and hopefully you caught my presentation last week with Tom Boley, but we look forward to sharing some insights for 2020, so head over to earningsbeats.com and you'll find a link on the website there. Okay, here's Delta Airlines, and what you see here for Delta is we've got a wedge pattern developing, but in general the airlines aren't going anywhere. I mean, this was $49 to $62 over a 2-year period. At least Delta's in an uptrend. That's kind of the good news here. I would say there's a little wedge going on right about here, and we'll just fine tune that. And recently it's been making lower highs, so and I don't know if that's on the back of crude oil, but there was a nice breakout here, and then all of a sudden it kind of gave it up. So when I look through these charts, I think one of the problems I see is it broke out for a couple of weeks and then it's pulled back down. It now needs to get above that resistance layer. Is that fair? I think so. Anyway, so we've got that. I don't want that many red lines on here, so I'm going to take off the big one and then just delete that one. And then in this one, I think I'm going to add it as just a dotted line so it's not so bold. But the bottom line is we're building into some sort of a pennant here in which way the airline's going to break. Okay, moving down into Deere & Company. One of the things we see here is this stock recently broke out and then immediately pulled back, and now it's trying to get back above the 10-week moving average, so it's just on a little bit of a check back. What we want to make sure of here is that this stock doesn't end up putting in a lower high in momentum and start to tail off. One of the concerns I have is this breakout, call it a horizontal line. I'm going to pick 170 just to make it easy. Here's a horizontal line at 170, and I don't really like that color, so let me pick something more obvious. There we go, and here we go. So one of the things we want to see is that after getting through this resistance layer, I mean, it went up and now it's just pulled back. Let's watch and see which way Deere goes here. We want to see a full stochastic bounce around this 50 level. We want to see it kind of stay in the top half of the scooter rankings. Usually does. It's a pretty big company out there. And the PPO just kind of got up to where the previous wave was. At this point, there's nothing wrong with the stock. What we want to watch for is that it doesn't end up making a lower high and start to lose momentum again. Anyway, at this point, it still looks fine. Moving on to so Dover Corp, I think this is the elevator people. Uptrend, hitting new 52-week highs, beautiful. Stock is great. EFX, this one's been just kind of making lower highs. This is Equifax. I think right between its 10-week and 40-week, I don't think this stock, when it falls out of bed, it really falls out of bed. Let's keep watching this one. These might have been the when their cybersecurity hacks hit. But the good news is the stock had broken out to new 52-week highs, and again, pulling back gently. So we're just going to keep watching this. Emerson, big company here, and they're trying to break out to new 52-week highs. I'm going to draw a horizontal line around $70, and then we'll just see how that looks. We might fine tune it. So horizontal line, you just type in the level that you want it at. We're going to go with a solid line. We're going to color blue and just hit update. So yeah, I think the line looks okay in terms of placement. The stock is still heading high. It's testing $77. So what we want to watch for now is how does it handle prior highs. Scooter ranking is up at 90. That's pretty good. Not quite 90, 85. But nothing wrong with that stock. I like that. Moving through to ETN, good old Eaton Corporation, top right corner, everything is bullish. It broke out above that $85 level. So all of these stocks have broken out or are just breaking out. They still look good, right? Here's Expeditors International, horizontal line, let's call it $80, just to put a number on it. And on this, what we see here, that breakout's pretty nice. We could also firm up the line a little bit, make it a little tighter. Just check it out at 75. And, that shows that this kind of rise up in here is a little too much. Anyway, if I was to fine tune it, I'd probably pick 76 just because there's too many peaks sticking out above the prior line. But I like the fact the stock is trying to break out here. Obviously, this one, the transmissions for America, or the trucking for America. So what we want to see here on this stock is that it keeps going. So far, it's pausing. Momentum right at zero here. I do not want to see this start to roll over and go below zero. That would be a problem for me. If the best we can do for momentum is a PPO declining below zero, that would be a real problem. So don't want to see that at all. Anyway, we'll just leave that red line on there at this point. Looking through Fastenal, that company's just up and to the right. I don't think there's any trend lines we need to draw here. If you put a horizontal line at 36, we bounce down, test it, and take off. All looks good. The stock has a PPO that's positive for the last 2 years. That's just bullish. FedEx. This stock is starting to get interesting. And why is this stock starting to get interesting to me? Well, one thing, the momentum continues to improve. We haven't quite gone positive, but when FedEx goes positive, that's a good place on the charts. I would draw some trend lines on here. First of all, one trend line, I would have drawn this one. Now I'd probably draw this trend line on momentum, just going across all of these peaks. And it's starting to break out here, kind of a 1-year trend in momentum. Let's make that a solid line instead of a dotted line. But it's starting to break out. I like this. Approaching zero, really want to see it get through there. You can see back here we had the same sort of thing, and then it finally surged above, and then it stayed up there for 2 years in a beautiful uptrend. So, that would be kind of how I would have drawn the downtrend line as it was progressing. Now maybe you just do a horizontal support and resistance in here. Something like that. If that's going to start to break out, I think you want to be a part of it. We'll put that in dots because it's really just still a cluster, but of sideways consolidation. But I think even a breakout of 175, right? That would probably confirm that all of this work that we did here from June on is starting to change. And again, FedEx will get this figured out. I'm quite confident in that. But the scooter rank is starting to move out of the bottom zone into the middle zone. That is one of the places I like to watch for. And if you see over here, It never really spent any time down there, but when it finally switched gears and broke out of the prior trend, it was not a bad place to get on board. I like the stock. I probably is back above both the 10-week and the 40-week. Wouldn't take much to get that push up. That one I'd watch very closely. Looking at Fluor, that one's still drilling in the bottom corner. I don't like that. Flowserve, not bad. Chart's still consolidating sideways for years, so it's not something I would buy into. It's just not going anywhere. General Dynamics, really interesting. A bit of a lower high going on here. So this is just drawing a trend line across here. Something like that. Let's make it solid, not dotted. And here I've got an uptrend line. And that looks pretty good to me. I don't want to see this PPO start to go below zero, so I'd probably draw my trend line something like this. If this starts to make this lower high and starts to roll down, I think that would be problematic. That surprises me for a big increase in spending in military and General Dynamics going lower. That would be an odd thing. GE here, trying to break out of this base, right? So let's call it $11. Horizontal line, and this one's been quite the story for 2018, 2019, the big decline, management change, trying to get the ship righted. This is what I like. PPO finally moving into positive territory, breaking through this $11 layer. You know, at this point, I think it's worth a buy, and your stop can go relatively close in here at, I'll call it last week's low, 1076. So up, down, back testing, and starting to take off again. But, you know, nothing wrong with that stock. That looks beautiful. And then going into GWW, Granger, this one's just breaking out to new 52-week highs. That's pretty hard to argue with. Horizontal line 3 1/4, and solid line, and in blue. Yeah, I like the look of that. And then the PPO is up above, but momentum is positive again, so that looks good. As long as this can kind of hold the breakout, we could put the line down a little bit. Let's call it 315. And just in that 315 layer, the only thing that would show more of is that we have a breakout and a back test. Breakout, back test, and now we're starting to head away from that breakout level. So this stock looks good. Again, as long as it's continuing up into the right. Scooter ranking back above 75. You can see that last time it jumped up here, it stayed up there for a whole year before it started to decline, and that was just breaking out of a base. So that's what we're doing right now. I like it. Good look. Okay, moving on to one more. Honeywell, uptrend up and to the right. Don't want to see the PPO roll over here. Would like to see it at least get up a little higher and just kind of hold up between this 2 and 4 level. Don't want to see a roll over here, kind of like it did in here with quite a significantly lower high. So we'll keep watching that on Honeywell. Ingersoll Rand, the refrigeration company. I used to work for Thermo King for a long time, or not a long time, in the early 2000s. What you see here is a big uptrend. I mean, the stock looks good, nothing wrong with that. Iron Mountain, really sideways for 3 years. I'd probably avoid it. Illinois Tool Works starting to break out to new highs again here, 170.99. We're sitting up around 180. That stock just looks good. If I was to draw a horizontal line in around $160. And blue, and update, we'll save the chart. And, you know, I think this is just starting to climb out of here. It has consolidated for a long time after the breakout. I do want to see that keep going. I'd draw a trend line up here, and if that started to break, I'd probably be a little more worried. But I do like the fact that it's consolidated for a couple of years and is just starting to hit its stride again. Jacobs Engineering, this stock moving up nicely here, up in the top right-hand corner, pulled back to the 40-week. Good place to look for a bounce. If it doesn't bounce here and continues to weaken, I do not like to see the engineering companies very weak. So let's see if it starts to get a full stochastic buy signal here. That would be important. There's a bit of volume that started to hit here on the selling, so something to watch there. Kansas City Southern, the railroad, taken off to the upside. Nothing wrong with that. Those tracks look higher. And Lockheed Martin. This one's consolidating sideways for about 6 months. Momentum is waning slightly, but still at a very high level. So I just want to start to see it, get reinvigorated maybe when the budget comes out and this stock starts to turn back higher. Southwest Airlines, obviously a big owner of 737 Maxes, all been discussed. Horizontal resistance at $58. That looks like it's still holding. And when we go here, solid, blue, and again, why own it? It's just stuck sideways, so I don't see a reason to buy the airline. I'd let somebody else take that on. Looking at Masco Corp, this one's up and to the right, still trending really nicely. I like the look of that chart. 3M, this one's been a bit of a dog. There's one thing that's starting to pay off here on this chart is we'll see if it can get any momentum up above here and break back into positive territory. Obviously, with everything being on a bull run and this stock can't participate, I know there's some environmental liabilities piling up against the company, but I don't know that I'd actually use this peak. It looks really odd. It broke out to a new 52-week high and then failed from there. Bottom line is we're consolidating down here. I think a break of 180 might give you a reason to start to look at the stock again, but it doesn't look that great to me. Anyway, there's your 180, and we'll just leave it at that. Looking at Ametek, up and to the right, nothing wrong with that. Just paid a dividend last week, so it's all good. Here's Boeing, the big debate. What's going to happen? And you can see the momentum just fluctuating right around zero here. Obviously, if Boeing is going to slow down significantly, I think that's a problem. They're still one of two airline companies or one of two airline builders. So I think that's airplane builders. I think that's a bigger factor. Again, we've been treading sideways for 2 years here. I think this was the 737 MAX decision. The big thing we're looking for here is, does support hold around $300? And if it starts to cut production, how long will investors wait? I think most people realize that when it does get approved, the stock will probably go back to new highs again. So nobody really wants to be too offside on that. I would say momentum is sitting right on an important trend line here. So we'll have to watch and see how it handles that. Okay. Caterpillar trying to break back above this 145 layer, 142. Let's just put the line in there and see how it looks. So far, it's tried to break out, hasn't really done anything. Again, if we're going to start to see industrial metals start to rise up, that should help the railways, that should help Caterpillar, Deere and Company, Hitachi, a few of the others. So anyway, watching to see what happens here, but obviously the stock looks like it wants to try and break out here after a brief breakout and a pullback. It's not like it fell hard. It came down to the 40 or to the 10-week and is now trying to turn up higher. So we'll keep watching that. Okay. Looking at C.H. Robinson Trucking, this one's breaking down. I don't like that at all. I don't like to see the truckers get this week. Stock hasn't been doing much for a while here. It's one of the bigger refrigerated transport companies. Looking at it, just kind of jogging sideways for 6 weeks. So to me, it's downtrending. I'd let somebody else try to fix it. Cummins breaking out to new higher highs here, 185, testing the prior high. So let's watch and just see if it can get through. We'll put the line in here at 185 and see if it can start to break out. Obviously, an engine manufacturer for the large trucks. If trucks are going to start getting ordered, this would be a good place to see it break out of. Could have put the line slightly lower here, $2 lower. The bottom line is it's consolidating at prior highs. Now what we want to see is, has it got the momentum to get back up and through? So so far the chart looks good. Oops, I think I blew past the railway here. CSX, this one's just jogging sideways, hasn't broken out yet. CP Rail and Kansas City Southern, those charts look really nice. This one's hovering right at 0 here. Do not want to see this turn down. One of my primary indicators is the strength of the railway, so I want to see them hold their uptrend, and in this case it's something like that. And if that starts to break, that's a problem for me. So far we got a lower high here, so we'll just keep watching how it handles this $80 level. Jogging sideways. I do not like momentum right here at 0. At least it's trying to get back above it, but I sure don't want to see it break below. That would be a problem for me. So we're going to draw this trend line in here like this. If this starts to stall here, that would be a big deal. Anyway, at this point I wouldn't own it because it's indecisive, hasn't gone anywhere for a year and a half. So Cintas Corp, beautiful chart up and to the right, consolidating sideways. Momentum is pulled back here, no big deal. I want to see it turn back up and start to go higher. I like the chart. Look at how the scooter has stayed above 50 or 30 for the most part the whole time. I mean, that's just beautiful. So wouldn't be changing my mind on that chart. And we're back to Delta. So with all of those stocks, that's the first half of the group. I have the other half of the group over here, but one of the things I wanted to do with this was to go and grab the RRG chart. What this RRG does, let's get rid of Fluor because it's clearly out of scale for all of them. So we just go and we uncheck it. And now we can say fit. And with that, what you'll notice is a lot of the industrial companies are turning down on the right-hand side. That's not necessarily bad because what they can do is they can come down and rotate. So one of the things to explain here is this is the momentum axis this way, and this is the relative strength ratio. So this is how it's compared to the S&P 500, and this is how it's performing in terms of momentum. And so kind of looking at your MACD wave or whatever in terms of improving or declining. So as you start to see the stock, so they can actually have a pullback in momentum but stay on the right hand side and continue to outperform the center of this axis. That's very positive. I think one of the nice places to look is over here on the right hand side, kind of around as it starts to improve. And we still haven't seen that yet, but we do have FedEx in there. That was one I liked. Flowserve was sideways. Eaton is down in here. We can, by clicking off these buttons really quick, we can kind of get rid of a lot of the fog. These stocks are all, of course, up in the top right hand quadrant, so nothing wrong with that. But now by doing that, we can get a little bit clearer picture. Let's just see if fitting it works any better here. I'm just going to hit fit. Yeah, so that's good. And now what we've got, when we look at it here, we want to see these ones that are in blue get over onto the right hand side. And if they can't get over on the right hand side, that's a bit of a problem for us. And here's Cintas down here at the bottom. So I would expect this one to turn back up and stay on the inside. So this is quite a nice location for it, just to start to get its momentum back and stay over here. Delta Airlines, CH Robinson, we noted those were pretty weak stocks. But I think the interesting one in this whole group is FedEx. And again, we can always change the tail length here, just shorten it up a little bit. So that's the last 4 or 5 weeks of FedEx. And if it's going to start getting to the other side, really good. Here's Honeywell trying to get to the other side. I have to say I like that. Now you can take these and just by sliding this side over here, we can watch how those lines move. But seeing all of these stocks here that were very high performers roughly in April, and where are they now? They've kind of moved out of the way. And here's General Dynamics starting to improve. This is back. The date is down here, August the 5th. They're starting to be okay. Delta Airlines, these were breaking down. Deere was starting to head up, so was CH Robinson. Now we'll just watch how those four move as we turn them over. But Deere trying to make it into positive territory. CH Robinson obviously going sideways here. General Dynamics breaking down, and Delta had gone all the way into the sour zone. And now as we continue to rotate, just want to see how they behave. And again, our benchmark here is the S&P 500. I think that's a pretty strong benchmark to use. And we've taken out all of the high performing stocks. So we're just watching how the rest of them are starting to emerge. But I think, this Expeditors International right in here, Honeywell, these ones down very close, and Boeing. Let's just watch what happens to them. So they're just rotating and staying on the left side here, which means relative to the S&P 500, they keep underperforming. That's a problem. And then I like the relative strength of FedEx here. And the ones that do quite well are the ones that are way on the outside here. And they get so much momentum that they easily make it over into the leading category. So FedEx, I like the setup for it. If it started to break down here and started to turn back down, then I'd probably avoid it. That would be kind of the way I'd look at it. So I think from the industrials point of view, again, let's go back to that chart here that I had. It's this one, industrial production. So this was kind of the sell signal I've got in my recession outlook. And when we go swing out this chart, maybe even farther, what we want to look for is big crosses of the 40-week moving average or 20-week moving average. And you can see back in 2000, we started to break down. 2008, we started to break down. In 2015, we started to break down. The stock market bottomed in 2016, so you can't really use it on the way up. But this first tentative signal that we got over here is the reason that I wanted to go check the chart. I think let's keep an eye on it and just see how they start to perform. We can also draw a big uptrend off the lows here, and that's starting to get tested as well. So with all of these factors coming into play, it makes for a pretty interesting chart, I think. Anyway, maybe on next week's version, I'll go through the other industrial stocks. There's another 40 over there, and we'll try and check those out from another method. But if we go look at the if we jump back into these charts here and just put them up on a summary basis, the scooter ranking, I think, tells a pretty good story. We want these industrial stocks to be above 75 in the top quadrant. Right now, out of this list of, I think, about 40 stocks, we've only got 7 or 8 in there. So that's not really as bullish as we'd like it. Boeing way down here at 7.8, so clearly weak stock. The scooter ranking is telling us a story, but again, on Boeing, momentum was pretty much flat, right on the zero line. The PPO, when we go into that chart, I would want to start to look at Boeing when it starts to improve. And why I still have this look, let me go grab a different one. That's better. So what we see is the scooter ranking pushing down into this bottom area here. And if this can start to turn up, that would be bullish. And again, Boeing for the most part stays well above 30. So now that it's beaten up down here in the bottom quadrant, any sort of a breakout back above your 40-week moving average or whatever would be a very big positive. And you can always set an alert on the dashboard over here. And the way that works is you just go grab the alert and says create a new alert. Oops, moved on me here. A new alert, and you would just say Boeing above 360 or whatever. And when you do that, then it'll send you an email telling you that that's no longer working. So hopefully you've enjoyed the review of the industrial stocks. We'll check out a few more of them next week and just keep track of that overall engine of the economy. Thanks everybody for taking the time to join me. Have a good week. We'll see how we do after the China trade deal. Thanks everybody. Bye-bye.